Hey, what's up guys? This is Sylvester, founder of FX Lifestyle. So in this video, we're going to be talking about Confluence. We're basically going to be putting everything that you've seen in the previous videos that I've taught you in my strategy. In the Confluence section, we're going to go over pretty much every single one of them, if not the majority of them, on a chart. And we're going to put everything together so you can see that when we're trading, we're going to be looking for these confirmations. And as we trade, before we place our trades, um, most of the time we'll be analyzing our charts. Successful traders analyze more than they trade. And one of the big mistakes of new traders, and I've done this myself plenty of times, is just feeling the need to actually be in the market and trade, feeling the need to actually trade every day. Now, being a trader in itself, like anything else, it's a skill set. It's a profession, I guess you could say, and it is a job in a sense. You could obviously make it a job, make a career out of it, and truly change your life. If not, at least add some type of extra money that you can make on the side without having to, have two jobs and be at one place at one time for X amount of hours and be somewhere else. But it does require time, and it is work. But it's not necessarily work where you have to actually trade every day, or every day you have to be in a trade, because at that point what you're going to do is actually overtrade. You're going to force trades, and you're actually not going to be taking good trades, and in the end you're going to fail. You're going to lose more money. You're going to get frustrated. You're going to feel like you're a failure. You're going to feel like you don't know what you're doing, or this is going against you, the market's against you. And that's the worst feeling you can have, because if you're not strong enough to push through that, you're going to quit. And a lot of people do quit when they start trading, because they get sidetracked from people who, you have traders online, I'm sure you've seen a lot, that post really big profits, or they post pictures of Lambos, pictures of crazy vacations and whatnot, that can all look in hindsight like it's all great. But honestly, most of us, or not, if not a lot of us, have been on vacations. We can go places and we can take pictures, and I have friends who have a lot of money, and I can go and take a quick picture next to the car and make it seem like it's mine and whatnot. But at the end of the day, you're just looking at a computer screen and looking at pictures, and you won't really know, if it's real or not. But what it does really is it kind of gives you false hope. It makes you feel that you can actually obtain these profits. You can make these profits. And the first thing that you're going to do is, no matter how much you're going to invest in the market, whether you have $100 to invest or you have $5,000 to invest, you're going to start using real high lot sizes. And you might even get lucky and go on a winning streak, but what you're going to do is you're going to just get greedy, and that greed starts kicking in, and then you're going to start using even more. And then you can literally blow your account in a couple trades. And if that's how you're going to be trading, without actually being experienced, then you're going to fail. You're going to lose. And then trust me, once you lose a lot of money, that in itself will make you want to quit, and throw in the towel. So back to Confluence, what you want to do is, when you place your trades, is have multiple confirmations, like I've mentioned in my previous videos. So in this video, I call it Confluence trading, and Confluence trading is having more than 3 confirmations, and I look for at least 3 confirmations to enter a trade. And as you can see, I've went over in my previous videos all the confirmations that I look for and that I use, and I use them in different ways, and I use them in conjunction with each other. Now, it's not like you're gonna have a trade come up all the time where literally all of my confirmations fall in line together. It's rarely gonna happen, but you're gonna be able to almost develop kind of your own trading style off of these confirmations, and use them in a way that I do. Or you might actually just be able to pull some of these confirmations and add it to your strategy that's already maybe partially successful. It just needed that extra little tweak, and this will definitely be able to help you and elevate you to the next level. So let's open up the chart. And what do we got here? We got USD JPY 4-hour chart. As you guys know, as I've mentioned, 4-hour chart's my favorite. So we have our RSI up. We're going to zoom out. Obviously, as you know, in the Fibonacci video, once you have these period separators at these vertical lines, the 4-hour is your weekly, your daily is your monthly, and your 1 hour is your daily. So you want to zoom out and make sure your dates, I always zoom out to make sure my dates align with that. So I have every 7 days. So right here, I'm going to zoom in a little bit actually. Boom. All right, so now I'm on 7 days. All right, so let's just start from like right here. I'm going to start from a random spot. So first thing I do when I place my trades, as you know, I do mostly swing trades. Unfortunately, what sucks with this is I can't really do exactly the way I do when I start. Um, the most important thing I start with is obviously support and resistance. As we know, you start drawing out your support and resistance, and you start seeing where price is at. Is it above the 200 EMA? Is it under the 200 EMA? Is it under the 50? Is it in between? Once you have your support and resistance drawn out, you can see where price is in between two zones. Is it near a resistance, near a support, and whatnot, so on and so forth. But I love using Fibonacci, and as you see in my Fibonacci video, these ratios are very powerful. And in the way I use it, when we're predicting it from one period to another, it can really help you in your trading and help you catch a lot of pips. So the first thing I do since I swing trade is I go to the daily chart and I look at where price is doing. In this case, I'm actually not in USD JPY at the moment. I haven't looked at it in a while. But the first thing I do to actually show you as an example is after I draw out my support and resistance, when it comes to the Fibonacci, this is the part that I can't really show you guys because even with the replay, once I click the replay on a certain time frame and then I go up to another one, it just erases it and brings me back to the current present time. But so just real quick, just to show you, what I first do is I look at daily and I drop my support and resistance on daily, any major support and resistance where price might be at. So for instance, when I'm looking here, when I grab my support, I'm going to be looking to the left, and I see prices around this point here. I see that price touch this point multiple times. I see it touch here, touch, price right here, touch, touch. So what I'm actually going to just do, I'm going to actually just grab it from the most recent point because we don't want to go back too far, especially if we're on a daily. You know, coming from here, we're already in like October. I don't want to go back to 2017 in July or September somewhere. It's kind of relevant. I mean, it might actually, from this point here, if I do drag it, I could see it touched here, it touched here, it touched here as well. But I'm going to just kind of keep it relevant. So I'm going to touch it from here. So I see that price came down, found support here. We got a bullish engulfing, came up. Now it's coming down and it's retesting this point. It's retesting our 50 EMA. It's retesting our support, so on and so forth. The next point that I would draw on a daily is come up right to this point. I could see that's the next high. That's a previous high right here where price found resistance, came down, so on and so forth. This was resistance, now it's support. So the next spot that I'm going to look for price to go, if it respects this point right here, is for it to go back up to here. So I'm going to mark this red, we're at the resistance. And then at this point, what I'll do, the next thing after I have my support and resistance drawn out, so I'm going to grab my Fibonacci tool. And as you know, daily is every month. So I'm going to zoom in here real quick. And I got September to October. Now October hasn't finished, so I'm going to grab my Fibonacci. I see that price made a low here and came all the way up there. So I'm going to draw from my low and bring it all the way up to here. Because I could see my high. The highest high in this box was right here, right before the line, right before it ended. So there's my Fibonacci. So now I see that price came down. It actually hit the 61.8 zone, found support there, came up, bullish engulfing, came up to 38.2, and it found resistance at 38.2. And now it's kind of right around the 50, right around the support, right on the 50 EMA. So I'm going to watch to see what price does. Especially since we go down to the RSI, we could see that RSI actually kind of bounced off the 50, then crossed above, it came down. So the momentum is still, it's about neutral at this point. Figure the 50 line is your neutral point. When it's underneath, it's bearish. When it's above, it's bullish, as I've mentioned before. So sometimes, you know, the RSI could be ahead of price or price could be ahead of the RSI. So you just, at this point here, you just want to look to see what it's going to do, see if it's going to jump back above. Basically, what I would look for at this point here is a candlestick confirmation because I see rejection of 61.8. I saw price went above 50, so the next extension is 38.2, but then I saw a huge rejection here. But this rejection is more to me a retest of this broken support. or not even broken support, but it came to retest um, this newfound support, which was previous resistance. So I look at that more of a retest than just a rejection of 38.2 to go further. Now that is possible, but again, I'm going to look for this candlestick. It's sitting right on the 50 and the support. And I'm just going to watch to see what happens. And if I get and if this closes, this daily candle closes as engulfing, then I can most likely initiate a long position. Again, I'm not trading this, but that's some type of confirmation that I would look for. And I would expect price to come up to here as the next resistance. So the next thing that I would do, actually, because I like to go down to the 4-hour, and I do go down to the 4-hour also for the fact that I look at daily just to see the overall market movement, but then I go to 4-hour to help me place my trades and be more accurate. Now, if we go down to the 4-hour, we can see that price actually came down and came up. Obviously, as you can see, it's made up of more candles, but you can see the rejection. We got a nice long wick rejection here, and price is coming back above the 50 fib now. So now here, what I would look for is to actually see if price closes above the 200 EMA and gets back up here, which would actually print you a bullish engulfing on the daily. But what I would do on the 4-hour chart is draw my fib. So I first draw my daily fib. So first thing I do is, let me just try to make this organized for you guys. First thing I do is support and resistance, like we did in the first video. Draw out my support and resistance on my daily so I can see my daily zones. The next thing I'll do on the 4-hour chart is I'm going to draw out my fib, just like I did on my daily. So I got the 8 to the 15th here. This box hasn't closed yet. So I'm going to draw my fib from here down to this point. I see my lowest is here and the highest point is here. So I'm going to draw from my high to my low. Now, as we can see here, price came up to the 61.8 on the 4-hour and rejected it alongside, if we go back out to the daily, alongside the 38.2. So see, they didn't necessarily align right together, but they're right near each other. You can see how the wick literally came to touch the 61.8, but it closed under the 38.2 all the way down here. So now we're just within this zone here. So we can look as a take profit level if it breaks this 38.2 to be the 127 and the 161.8, which aligns right with this resistance zone. So that's the first thing I do, because what this will help me do is get more accurate entries when I zoom down to the 4-hour chart. And I will zoom down to lower time frames, like for instance the 1-hour. And sometimes I will draw my fibs, but I tend not to, especially because I swing trade and I don't want my chart to look too cluttered. So that's the example I wanted to show you guys, because if I do the replay or when I draw it from here, back testing and showing you guys Confluence, it's hard to do it. It's not going to be as aesthetically pleasing to the eye. It's going to get a little bit confusing, but that's what I do. So then that's like pretty much the first step that I do on every trade. Support resistance on the daily fib, go down to the 4-hour fib. Sometimes they also even draw like support resistance zones on the 4-hour. I draw my trend lines, like for instance here. This would have been a trend line for me, something like that. Grab it from this point here. So you can see multiple touches, kind of like a fake breakout. Respected it, respected it, respected it, respected it. Looking just for multiple touches. As you can see, we're obviously in a bullish trend. We're above the 200 EMA, so I'm going to be looking for bullish entries. And I could see price maybe even come down even a little bit lower, make another like double bottom, triple bottom or something here. So just to make it quick, that's what I do. So now let's just go back a little bit further back so we can just get to the point of this video. And we're going to do some Confluence trading. Let's just see a nice spot we could start in. Let's go down to the 4-hour chart. All right, let's do something right around here. So you can see price was consolidating. It was kind of in the range, just kind of moving sideways. All right, so let's start from this point here. So first thing, support resistance. So let's just pretend this didn't happen yet. I'm kind of in this box here. It's about to finish up. So I'm looking to the left. I can see I got nice 3 touches here. So what I'm going to do, I'm going to just grab it from here. I'm going to draw it out this way. So again, support resistance, we draw it from the bottom of the wick right to the body. All right, so that's going to be, at this point, it's going to be my support. So I'm going to mark it blue. I'm going to grab another rectangle. I'm going to draw out my resistance. I can see there's a high here. I'm going to make that red. All right, so you can see the wick actually touched it here, came down. So it's in this range right now. It's bouncing up and down here. I didn't come back up to retest it here, but kind of just found some resistance here, which you could see if I drew it out from there. It kind of lines up with that. But we're in a range either way. It's right on the 200 EMA, the 50 EMA. It's not going up or down. It's kind of, just moving sideways. So next thing that I would do is I would draw out my fib. So I'm going to draw it from this low to this high here. So this is just ending. Figure this is just ending. So we're going to try to predict this. So now we see price came down, went under the 200 EMA. So this is what I would be looking for. Now right here we could see price went up to 38.2. We saw a bearish engulfing candle close right off to 50. Not necessarily just an entry just yet, but what I would actually be looking at is I see the RSI came down, hit the 50 right there. See how it came right back on there? And it retested that zone right there. So now I'm going to grab an Eclipse tool again. You can see right in this area. It retested the 50 fib. So that right there, actually, the bearish engulfing under the 50 came up to 50 for the retest. That's an entry right there to go short. And now I have a support zone here, so this is a small trade. But right off the 38.2 and the 50, 50 EMA, 50 RSI on the retest right there, you enter short. Your first take profit is 1.27, and your second take profit 1.618, as you know from the Fibonacci video. And you can see price went right down under, came down, hit the 127, came to 161.8, hit the second take profit, and then came up to here. Now at this point, we do support and resistance again. So I take it from here. That's our next low, which we could have already had drawn out before because, again, we always look to the left. We see a bottom here. We see price hit it, bounced off, came down, bounced off of it here again. So we see that's a nice support zone. And that's actually lined up right with 161.8. So 50 EMA, 50 fib, bearish engulfing, retest of 50 RSI once it crossed underneath. Boom. So you got 1, 2, 3, 4. 4 confirmations right there. 5 if you want to count the 200 EMA being retested as well. You got 5 confirmations, and now that's a good trade to take. Now you're not going to win all of them just because you have more than 3 confirmations, 4 to 5. That doesn't necessarily mean that it's going to go in your favor or go to your targets. But again, it's all about probability, and we're going to raise our probability and our probability of winning trades when we have more confirmations. So now next fib I'm going to draw. Say this all played out. Hit our take profits. Next fib I'm going to draw this high here. I'm going to take it to the low right there. And as you know in my previous videos, I do keep the previous box open with the fibs sometimes because either I'm going to get this lined up fib right here like the 88.6 and 38.2, or I can see price still respecting this even in the next box over. As you can see, the 161.8 was actually being respected here. So now, let's say this is all finished. We took our take profit. We saw price come up, bearish engulfing, but I'm not entering short yet because I have the RSI on the bottom under 30, which is suggesting to me there's low momentum, low bullish momentum, and also you can consider what's oversold. I'm in a support zone, but let's just say we wait for this to play out. Now, let's say you want to take a quick trade. We see price bottoming out right here. We see it create a double bottom. We see our RSI showing us divergence, bullish divergence. We got a higher high on the RSI. We got price not making a lower low necessarily. The wicks are, but I don't count them too much. But either way, you can see that's clear bearish divergence, and you see we hit a double bottom. So that alone right there could be an entry for you with this bullish engulfing. Price came down and then came right back up. Now, because we're under the 50 EMA and 200 EMA, I just pointed that out real quick as an example of divergence, but I wouldn't necessarily enter this because that's a counter trend trade, and I try not to do those. They're risky. Always remember, the trend is your friend. I'm sure you've heard this before. The trend is your friend. If you trade with the trend, you're more likely to win. You're more likely to have price go in your favor, and you're more likely to have winning trades. So always trade with the trend. And as I've mentioned in my previous videos, that's what we use the 200 EMA for. So in this case, what I would have just done, I would have just let this play out. I would have just watched it. All right, we got a double bottom. We got a bullish engulfing. We got kind of like a retest of this neckline, and then we try to shoot above. Now what I'm going to see when I'm looking for my short positions is, now I take my Eclipse tool just to show you real quick. I still have this open, so I see now price is rejecting this 161.8, which if you see it on the fib that I had drawn out from this point to this point, which is this one here on the right, you could see that it kind of went and almost touched 38.2, but really where it rejected here was the 161.8, which is more accurate. And you could see over here, we just have a dead space. We don't have anything. So this is where it helps to keep the other one open. So now what I'm seeing here is a rejection of the 161.8. I see a rejection off the 50 fib. You see price came down, came up, and then came down, created like a little double top. If I went down to the 1 hour 30-minute chart, you probably would have seen a little double top here. So now at the same time, I'm looking down at my RSI, and I see a little rejection off the 50 RSI. And then, as you know, that's one of our confirmations right there. So in this case, this is where I would have entered short right off this bearish engulfing, because I got a nice little double top. I have a bearish engulfing right here. So I have 161.8, 50 EMA, 50 RSI, bearish engulfing. Now this support zone turned resistance. This was broken support right here. So at this point here also, I wouldn't necessarily took this buy because now I'm going to be watching for a retest. So I mean, really, I would have maybe took this buy because I always look for retests, as you guys know. But again, I would be just watching for a retest for confirmation, and then that would have just gave me even another confirmation. So let's just count it again. I got 161.8, I got 50 EMA, I got bearish engulfing, I got a little double top, I got 50 RSI. So what is that, like 5, 6 confirmations right there. Take this trade, I could take it right back down to this next support zone. That right there, you just caught 50 pips. Now, if I hold this trade, which I tend to do because our target from this point here would have been negative 27 and negative 61.8. So let's say I'm trying to hold it to here because I see a rejection up to 50. We bring it down to here, price comes back up right where we entered. So we're basically at break even right here. If I close this, I got 50 pips. Price went back up. Next rejection, same thing. 50 EMA, retest of the resistance zone, that was previous support. 50 RSI, we got a little double top formation even on the RSI. The RSI actually got retested twice on the 50 level. So 50 EMA, 50 RSI, retest of resistance. Don't necessarily have a bearish engulfing, but if you want to look at this candlestick, this would have been my confirmation. I see a long wick rejection from the 50, again touching in the resistance zone, and a nice bearish candle. I entered short right here. Take this back down to negative 27, negative 61.8. Boom. I mean, that would have that just happened real quick. Just came right down. You guys can see how powerful the fibs are, as well as our support resistance, the 50 EMA, the 50 RSI. And right there you have a couple winning trades, and all it takes is patience. And this goes back to where I say, when you start off, you want to try to avoid the feel of the need to trade. And this is actually why I swing trade, because with swing trading, it helps me control that. Because these setups, as you know, can take days, they can take weeks, or at least 8 hours. Have 2 4-hour candles form. Each one's 4 hours, at least 8 hours. So it keeps me in check, and it also helps me not be glued to the screen. I just kind of go back every couple hours and see how the market's doing, and just check it on a daily basis. So that's where that helps me to not overtrade. And at the same time, as you know too, the longer the time frame, the more stronger the trend is, the stronger the signals are, the more powerful it is. So that also helps as well. So that's kind of why I swing trade. But getting back to this, so at this point here, this fib line is relevant. I'm going to keep this one open because obviously I'm coming down to my targets. At this point here, when I entered this, I could have actually already had this drawn out. So just to keep it all the same, I would have had this drawn out from this low to this high. So at this point, again, what you're seeing is a rejection of the 50 fib, rejection of 50 EMA, resistance, previous support, 50 RSI, formed a nice double top. You could look at this as a double top altogether, or you could just even see this little double top here where it came down again, and off the even 50 fib. And then boom, you have your 1.27 and 1.618 take profit levels. They got hit, as well as the bigger one as well. So these fibs are no joke, guys. They're very powerful. Back test them, use them. They can definitely help you with your trading. All right, so now this one's going to be irrelevant. So we had price come down here. So as we're going to be drawing out our support and resistance. So right here, I'm drawing this out because I had like a support that was found here. I should have actually had this already drawn out. So we had this one drawn out. Now we're going to be drawing this one. So price hit our take profits, close out our trade. I'm drawing from this high to this low again with my Fibonacci. So now I'm going to be watching what price does here. Again, I can do a counter trend. I can see price went up, got rejected off 38.2. If I want to, I could even place a little short here. But at this point, I'm not doing that. Again, I'm not counter trend trading. What I'm going to watch is for price to come back up to the 50 EMA or 200 EMA, some type of resistance zone again, and enter short. I'm going to be trending. I'm going to be trading with the trend. I can see we're in a bearish trend now. So what I see here now, when price came down here, you can see we got nice bullish divergence developing. So I'm basically watching this. And again, I swing trade, guys, and I wait for setups. I'm not going to just jump into trades just to jump into them. So if you would have just jumped into this trade, let's say you came down here and you see this on your chart, you see this big bullish engulfing. And if that's your only confirmation, then you're like, wow, this bullish engulfing literally just took up all these candles. Well, you just got played because you didn't have your fibs drawn out. You didn't have an RSI indicator to use, so you could see that there's actually divergence happening. Well, actually, no, not in that case. But either way, my point is you're not going to just use a bullish engulfing candle as the reason of why you're going to enter this trade, especially if you're in a bearish market, and just think that because of how big this is, it's going to just shoot way up. You want multiple confirmations. And at this case, you would have entered this trade up here, and then you can see that you got a rejection here, and the price just literally took that out. Like it didn't even happen. And, now you blew your account or you lost a lot of money. So we got these fibs drawn out. So you see price came up, rejected 38.2, came back down to the 0. Now we got a little double bottom. At this point here, you can see the RSI hit this bottom here. This is the next one. So this is where it actually made the lower low, but RSI made a higher low. So now I see I got divergence. So actually price respected that divergence, came up, created another little double bottom, and RSI is still up. So it's still creating that divergence, which is what pushed the price up to here. Now at this point, when it got to this 50 EMA, you could see it broke right nicely through it. I didn't see it struggle. I didn't see no retest, no rejection. So I'm not entering shorts here because now I see it rejected here. It rejected here. Not really, it's not a bearish engulfing candle, so I don't have that confirmation there. I don't see the RSI coming down or rejecting the 50 level, so no confirmation there. So I could see price go up, come down. Now it's respecting this 50 EMA right here. And it came up. Now what I'm going to look for is just to see where price goes next. And at this point, I see that price is hitting this resistance zone. So I'm going to keep this open. But at this point, this box already happened. So I'm going to take this low. I'm going to take this low to this high right here. So I have this drawn out. So now I see price come up to resistance zone. That was previous support that we broke through. So now I'm getting interested. Now I'm like, okay, all right. So now this is gonna when this didn't happen, this is gonna be the next thing I look for. And then now I'm just looking. So what do I see? I have my fib drawn out. I have price hitting resistance zone. I have price hitting actually a 61.8 fib level. So it's rejecting a 61.8 as well with the resistance. That's two confirmations right there. Now I'm interested. I got price above the 50, but it's right near the overbought region. I got a bearish, not really bearish engulfing, but I could see it came down. We got a rejection, like a nice wick rejection from here. And then price came down to this point. So this is a nice bearish candle that this may go short. Came up, came down, came back up for retest. What I actually would have looked for at this point is I see the price rejected off 61.8. It respected a negative 27. So at this point here, I'm not sure yet if I'm going to enter because I needed to break this fib level as well. I can see it broke right through, respected the 50. So let me redraw that a little bit to the left so you guys can see that. So we still have this open. So now I'm seeing here price is respecting the 50. It came back up. So now this is where I'm going to be really interested because at this point here, you can see price came down under the 50. It's rejecting 61.8 again, created a nice long wick. We got an inverted hammer candlestick right there. With that long wick rejection off the resistance, that right there could be a confirmation for me to enter short off of here, and it's closing under the negative 27. So at this point, you could even enter a trade. Let's say it going right under the 50 fib. It's already under the 50 RSI, and boom. Now, to be honest with you, I probably wouldn't take this trade. You know why? Because I probably wouldn't have enough time. I wouldn't have just entered off this candlestick, but that could be a good confirmation, but it's usually not enough for me. And this candlestick doesn't look like it took time to come down. This is one of those candlesticks that actually just shot down. So at this point, if I didn't take this trade because of resistance, because of 61.8, because of break under negative 27, and this inverted hammer, and under 50 RSI, which honestly is actually good enough confirmation for you, but I mainly look for is bounces off the 50 EMA, because at this point here, I wouldn't have known that this price would have went way under the 50 EMA. For all I knew, it could have actually just retested the 50 EMA that it actually broke above over here and tested. Could have tested it again and just went up. So I wouldn't have really most likely entered off of that. But that alone right there was still 3-4 confirmations. So you could have possibly actually entered off of that. So now I'm going to take out this fib. I got this one drawn out. This came back down to this support zone right here. So let's say we're back up here and this box finished. So I'm going to draw my fibs again. Now at this point, I would have had this already drawn out before because I could see that support zone, but let's just draw that. We can actually see price hit it again. So that's just going to validate the support zone even more. I'm going to grab it from this wick here, because this is where I saw price come down to, and that's where we're respecting it. I'm going to color this blue. So it came down for rejection, came up to the 50 EMA. So it broke back down under 50 EMA. Now I'm interested. Now I'm not going to enter short just yet because I know I got a support zone here. So I got to wait and see if it's going to break through here. And also I always look for retests. So price came back up. Boom. You got a retest right here. We don't have a real bearish engulfing, but we have a 50 fib, 50 EMA, getting rejected off the 50 RSI. I honestly would have entered off this candlestick right here. Now price did hit the 50 point here and came back up for retest, but so I'm going to be in some drawdown, and that's okay. We're not always going to have a perfect entry, so that wouldn't have necessarily just scared me right away. But I probably would have entered it right off of here because I have a nice bearish engulfing. I have rejection off the 50 RSI. So let me draw that again so you guys can see. You can see that right there. You have rejection off 50. So that we got that triple kill confirmation. We got the 50 fib, 50 EMA, 50 RSI. Perfect. And then on top of that, I got a bearish engulfing. Price is coming down. In this case, it went back above us. So I entered, let's say, somewhere here or here. So that's 109, 173, and it came up to 109, 730. Now I'm on the 4-hour chart, so I mean my stop loss can be anywhere from 50 to 100 pips, especially when I'm trying to catch, at least 100 or more. But either way, like I said, so we got a little bit of drawdown. I'm gonna watch to see what price is gonna do. At this point, I'm just expecting it to go back up to retest the 50 EMA. So I could see it went up, came right back down, came up again. Um, but it failed to break the 61.8. So I saw the rejection here. I saw the rejection here again, and I saw the rejection here. Honestly, at this point here, I might be getting a little bit nervous. I mean, I saw the 2 rejections here, so I could tell this is holding up. But when it's going for it again, the 3rd time, now I'm not sure if it's going to be a triple top. This might break through. So I probably would get a little bit nervous. But again, I saw you could see the rejection. You just got to be waiting patient, wait for candles to close. See, this candlestick would have thrown people off. They would have seen this big bullish. They would have seen this long wick rejection off the 50, that candle, and all of a sudden they're expecting it to go up. And again, you can't just go off of candlesticks. That would have tricked you. That was a buyer's trap. People went in to buy and the price went right back down. And that's why you see this big drop, because it literally trapped buyers and it filled the orders of all the sellers that wanted to sell the market at this point. So right here, it came back down under. So now I entered from here, 109, like 150, 170, whatever it was. Came back down to this point. I'm doing a take profit. Now our targets again are negative 27, negative 61.8 off of the bigger fib. But being that I'm coming down to the support zone, I probably would have took profit right here just to be safe. So 1085, that's 60 pips right there. I just caught 60 pips right off this trade. So we got a nice triple rejection off the 61.8. We got rejection off the 50 fib, 50 EMA, 50 RSI. Price came down. Now if I held it, I could see, now I'm going to get rid of one of these fibs here. Now keep in mind, this doesn't happen so fast, so I got to kind of just keep track of this as I'm going it with you guys. Just a second here. All right, so I'm going to take this one out. I'm going to keep this one open. Now this all happened here, so I'm going to take it from this high and take it to this low here. I'm going to keep the other one open. So price came up. So now here I see a rejection off 61.8. But again, actually, see, I'm getting ahead of myself because I wouldn't have seen that because this wouldn't have ended until this point here. So here I'm seeing a rejection of 38.2. I see the bounce off the support. See this big bullish, but it came back down. Now I see these dojis happening here. So now dojis are signifying indecision. They're showing me that the bulls are kind of losing strength because, they came up, they came back down, and then now there's dojis. So I have an idea that this might actually break support. Now if I held that trade and I didn't close it, I see it's rejecting 38.2. At this point, we're already under the 50 RSI. That in itself can be a confirmation for you to enter short or go short because we know we're in a more bearish market. We're losing momentum. So we got more bearish momentum. So 38.2 rejection came under the support zone and price went way down. Now originally from that other trade, we could see negative 27 take profit hit. Look at that nice bounce right off of it. Came up, hit the negative 27 we had drawn here, came down, hit this negative 61.8, came up, hit this one, came down. I mean, it's literally respecting these zones, guys. And honestly, I hope you're wild when you see this because when I first learned about this, I was like, holy shit, like this is a cheat sheet. This is like just not even fair game. And it's not necessarily going to be bulletproof. It's not like you're not going to lose. You're going to lose trades with this. You can't just use these, but it's definitely going to help you guys so much. I mean, you could see how it's just literally giving you support resistance you otherwise wouldn't have had drawn just off of the regular support and resistance we draw off of wicks. So take profits hit, smashed, just came right back down. Easy money right there. So you got profits made. Now during the same time though, I'm kind of getting ahead of myself with this because we're doing everything in hindsight. So I'm just kind of trying to show you all these confluences. But I do, as you know, we watched the previous video, the one thing I kind of lost here is I do draw these trend lines on the RSI. Because as you know, with these RSI settings that I have, the RSI follows price very closely. So we draw these trend lines, as you've learned, because when you draw your trend lines, For instance, I would have had this trend line drawn. You could see nice rejection off the trend line, came down, rejection, came above, came down, blah, 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 came down. See, hit it, came down, hit it right here, came down. So we draw these trend lines, and that's just one thing I just kind of got ahead of myself with this. But I wanted to focus on these confirmations because those are even more important than the trend lines. The trend lines are just to help us to know, what kind of trend we're in, and it's just a little extra confirmation there. But I draw these on the RSI as well because you see at this point here, it just so happened, even though I didn't have this drawn, when I connect these points, you see how RSI actually came down and broke through it and came for the retest. As you know, we always look for retests. Right here was another confirmation for us. We had a retest of this trend line. As well as it was retesting this 50 as it broke under, it was also retesting this previous trend line just on the RSI. You didn't even need to have just a trend line on price. But you could see if I draw it out, we have a retest here of the broken trend line. When I have a counter trend line drawn, we do have retest there. That's another confirmation. See, I didn't go over that with you before, but that's honestly, to me, those are basics. But these are the most important confirmations that I want you guys to focus on. And trend lines, I would hope that every one of you that are watching this already just already know how to draw them. Not just from my video, but already have an idea of how they work. So I will be drawing these trend lines on my RSI as I go. And at times, I will see them break through them and also retest them as extra confirmation as well with price. So don't forget to do that. That's one thing I forgot to go over as we were going with this. So I would have had something like this drawn, possibly like this. And I will adjust them as price moves because, again, we're doing this in hindsight, so it's easy for me to draw this one out and see that price respected it right here. I mean, the RSI respected it right here, so as well did price on this support zone. And I can see here we got a rejection. Off the 50 EMA, 50 RSI, RSI trend line. I mean, my goodness, it's like you could even just use these alone if you wanted to. It's crazy with these RSI settings, guys. They're very powerful. This really changed my trading. This RSI changed my trading. These settings are phenomenal. They're crazy on how they actually follow price. So yeah, so I mean, you're gonna be drawing your trend lines. That's extra Confluence, as you guys know already. You can see we could have drawn this trend line here. So we saw a rejection right there. Let's draw the next fib. So I had it drawn from this point to this point. Now this whole thing finished. Drawing the next fib. Sorry guys, I was actually I was looking over at my second screen. I got 3 trades open right now. Just wanted to look at the how the price is moving. So all right. All right, so we got let me zoom in here because see it's messing me up. I gotta make sure I got it on 7 days. Perfect. All right, so I got my high to low here. I'm gonna keep this one open. This came down. This hit our take profit levels. Now we're up to this point. It's ending, so I'm drawing it from this high to this low. Price found some type of support here. I see a little inverted head and shoulders right there off the bat. Boom, broke the neckline, shot up. But again, we're in a bearish market. I'm looking to see what it's gonna do around the 50 EMA. So I see it broke over the 50 EMA. It broke over this 38.2, broke through these fibs. Now I have this resistance trend line drawn out. So now I see that I'm hitting the resistance trend line. Let's see if it's going to respect it. So I see a bearish engulfing. So price is respecting it. Now I'm not entering yet because I'm not under the 50 fib and I'm not under the 50 RSI. But I do see a respect there. So I'm going to keep my eyes glued to the screen. Now I'm going to watch. See price came down, respected 50 EMA with this doji, came back up. Now I'm retesting this resistance zone right here on this trend line. Now, if you want to, you could enter just off of this big bearish engulfing. But again, as I've taught you guys, I don't just go off the candlesticks, because look at this point here. Even though we have these two fibs aligned, which are showing you major resistance, as you've learned in my Fibonacci video, it breaking down just underneath like that, it wasn't like a clean test of these levels. It did break above it, it did break under, then it broke above it. So that alone is a little sloppy. But now we can see it broke under the 50. So now I'm going to be interested to see what's going to happen. And again, we look for retests. So now look at what price happened. Price at our side came under the 50. At that time, retested our 50 EMA, retested our negative 27,061.8 Fibonacci aligned level, which is major support or resistance. So now I see that it's actually retesting that as it broke through. It's retesting the 50 EMA that it closed down under. And at this point here, I got a little bearish engulfing candle. Now I can enter short right here. My RSI is under 50. I hit these levels. I hit the trend line. I got a little double top. Boom. I enter my trade right here. Price came down, hit the 38.2. Under the 50. Came back down to this point here. And then it came back up. It kind of retested this, what you could call a neckline. Now this didn't hit our negative 27, which again, those are take profit levels. That doesn't mean they're always going to hit. I was just trying to see if there's a support zone. So really, I wouldn't have actually had much of a support zone drawn out here. So taking this trade, I would have rolled it down. I would have saw a rejection of 38.2, rejection of 50, came back down, came up, came back down. At this point here, probably maybe even at this point, I probably would have closed out of this trade, because now I can see that price is finding some support here. I mean, I could have looked here a little bit, but that's not like a clear support resistance zone. And also I could just see that RSI was making a higher low as well as price. So right there, you could have closed out something like that. But even in this point here, entering from there, 107.2 down to 106.7, you got 50 pips, 60 pips, 80 pips, something like that. So even just trades like that, and this is just trading the 4-hour chart, guys. Like again, I look at daily and 4-hour, so I'm usually looking for bigger trades. But just even looking at the 4-hour, you could easily get 50, 60 pips on these trades. So now for the next one, this ended. I'm drawing my next fib. I'm gonna keep this one open. Previous one, like we always do. So now we saw price came down here. I'm drawing this counter trend line. I see price came back down, retested this zone, came back down to this point. So now what I'm seeing here at this point is I have this trend line drawn out. See rejection of it after it broke out, rejection of 50 RSI, rejection of this trend line, rejection of 50 EMA, rejection of two 50 fib levels right there. That is just ultimate confirmation right there. Got a long wick rejection, closing under 50 EMA. I place a short right here. Let's say I place a short right here. I'm 106.50. I'm coming down to 105.50. That's a 100 pip trade right there. 100 pip trade plus. Now at this point though, I do have, so this hit our negative 27 and negative 61.8. Both are take profit levels. Now I'm going to draw out the support zone right here. To the right. I drew it all the way out there. This didn't happen yet. But I would have drawn this out because now I see price came back down from it. Now, next trade out I was seeing, after I took profit on that, now I see price bounce from here, previous support, came up. Now it's retesting this 50 EMA again. It's retesting the 50 RSI. It's also retesting this double top neckline, as you guys already know of. And look how it actually respected it even here and here. So now this is resistance retesting this neckline. I got a bearish engulfing right here. I entered right there. Price came down, came up, came back down into the support zone. Even from, let's say here, 106.2, came down to 105.6. That's 60 pips right there. I could have scalped this real quick, made some extra profits after that. Now here what I got a support zone. I got a double bottom that happened. I got pretty big divergence, not as clear. I mean, it is slightly up right here, but it's more like within the support zone. It's kind of, these wicks are hitting these points here. It's almost straight, and it's already hit up take profit levels. So you could see a little bit of divergence there. You see a W form. So if you want to go above, if you want to go against the the trend and counter trend trade, you could do a buy here. You got a bullish engulfing, you got a double bottom support zone, bullish divergence, hit our take profit levels, and then price goes up. And that's it. Don't want to make these videos too long. I'll be making more. These are my first videos, guys, so I hope you're enjoying them. I hope you're learning a lot, and I hope I'm being the best teacher I possibly can for you guys. I've definitely seen a lot of you guys grow within the group, and it's awesome to hear when I got people messaging me privately and they're making a lot of money, or they're making money profits off my trades, or they're learning a lot. It definitely feels good, and it's kind of why I do it. It keeps me busy. I like it, but I also like the fact that I've even had personal friends that I've taught trading, and it's changed their lives, or it's added extra money that they didn't have or they didn't know they could have, and it's definitely a great feeling. So I hope you guys are enjoying this course. I hope you're enjoying these videos. I'm definitely looking to make more, and I definitely know that once I have more and more people buying this course and they're taking it, I'm gonna have even more feedback, and I'm gonna have more requests, and that's just, again, one of these things you're gonna get with this package is you're gonna have me making these videos for you um, consistently. And as I get more feedback, as I get more requests, I'll be making more videos, and we're going to be growing together. You guys will be growing as traders, and I'm going to be growing as a teacher or a Forex mentor, or whatever you want to call it. So I hope you guys enjoyed this video. If you have any questions, again, 24/7 support. Just email me, message me in the group, message me on Facebook. I'm more than happy to help you. And we're going to have webinars set up. I'm going to try to do at least them once a week. So we're going to be going over stuff like this in more real time when I call my trades. And I hope that even helps you more than these videos as well. So thanks again, guys. Looking forward to see you in the next video. Peace.